Hello and welcome. It's DC Capital and this is episode 16 of the Index Futures series. In this episode we will deal specifically with the PM session or afternoon session, New York local time, and the typical characteristics of this session. Let's jump right into the weekly review for the E-Mini S&P500 December contract, and we'll start here with the daily chart. And in the previous week we saw price trading back into this bullish order block, which is delineated here with this blue line, accumulating long positions, and we see the Thursday reversal profile into Friday rally. 1 hour chart for the S&P 500 December contract, weekly profile, bullish profile, Thursday reversal. We can see at the beginning of the week price rated the buy stops and broke market structure to the upside. Wednesday created the high of the week so far, and we have resting buy stops above, and Thursday traded lower into the sell side liquidity pool that has been created during Monday and Tuesday, and from there price traded aggressively higher. Standard Thursday reversal profile in bullish conditions. Friday is seeking buy side liquidity, and we can see an AM session and a PM session trend that is bullish. Also we can see that here on this pattern, Tuesday's sell stops are getting rated, Wednesday's buy stops are getting rated, Thursday reversal into bullish Friday. This is Monday's trading, the afternoon session, New York local time, 1:30 to 4 p.m. and we can see that price rated the sell side liquidity that has been created during New York lunch. Price traded lower, and typically if the market tends to be bullish and or is in a bullish environment and we expect higher prices, we want to see the New York lunch liquidity, the sell side liquidity, to be taken and the continuation in the PM session. So the AM session is bullish and we are trading in sync with the higher time frame bias, and then we are looking for some sort of consolidation during the New York lunch hour, waiting for the sell stop rate after New York lunch, and then we are looking for discount PD arrays to accumulate long positions, targeting the on close orders time period for profit taking. And this is what we can see here. Price traded into a 2-minute bullish order block, which we can see here. Long entries are getting accumulated in here. We can see the bullish market structure shift on that candle. This is an early sign that the order flow is now turning bullish. We have the displacement higher in price and the fair value gap inside a bullish order block to enter long and target buy side liquidity and or the on close orders time period for profit taking. This is Tuesday's trading, 3-minute chart for the E-Mini S&P 500, and in this scenario I will talk about why I'm not looking for any setups on this particular day, because price already traded lower during London and created relative equal lows, which you can see here with the sell side liquidity. I was looking for longs after those relative equal lows are being rated, but we can see price never rated those equal lows, so therefore I was not looking for high potential long opportunities on this day. But we can see there is a displacement leg higher with the equities open at 9:30 New York local time and the possible entry to reaccumulate long positions. Personally, I'm not interested in this setup because my main focus is on trading at the extreme ends of the range after liquidity has been raided. And this is also really important on your part, on your trading. You have to determine what is your trading style. What are you looking for when it comes to trading? And most important, know when you send sidelines and you know that the probability for you personal is low. Wednesday, 5-minute chart for the E-Mini S&P500. We can see that price rallied aggressively higher at equities open New York local time 9:30, and it is raiding the buy side liquidity pool above this intermediate term high. This orange shaded area is my point of interest because now we are operating at the extreme end of the range. I'm looking for high probability short setups in this box and targeting the equilibrium price point or lower for profit taking. The equilibrium price point or the middle of the range is being created from this low to this high. Notice that I'm using the bodies and not the wicks. Let's jump into the next slide and I will show you the setup in detail. Okay, 3-minute chart. The setup in detail here. We are still operating in the orange box after the buy side liquidity rate at the extreme end of the range. We can see here that price broke the market structure to the downside and created a tiny fair value gap in here. This is my entry point and I'm targeting the equilibrium price point or lower. So in this case, I'm looking to build a bridge from a premium PD array, which is this fair value gap, to a discount PD array at or below equilibrium. The discount PD array is the fair value gap and or this bullish order block. This is first is trading 1-minute chart for the ES. We are operating in the New York morning session or AM session. At 9:30 there was a Judah swing lower seeking sell side liquidity and orders are being paired up. I'm looking for long accumulation at the extreme end of the range after the sell side liquidity pool has been raided. Bullish market structure shift, 1-minute fair value gap to enter in confluence with this 4 consecutive candle bullish order block. Order flow is now turning bullish and is seeking buy side liquidity, and I'm aiming for those relative equal highs with buy side liquidity and or the midnight opening price. Notice that a possible scale in inside this fair value gap and ideally at the consequent encroachment of this fair value gap, the midpoint, would be ideal to reaccumulate long positions. This is Friday, the 3-minute chart for the E-Mini S&P500. 8:30, high impact news, GDP for the US dollar. We can see that here price rated the buy side liquidity and the sell side liquidity pool. And what is really important is At this point in time, I don't have a clear bias. I don't have a clear draw on liquidity. So what I'm doing is I'm waiting for the displacement higher, and I'm looking for an entry in the direction of the displacement. So in this case, the displacement was higher and a fair value gap has been created below the midnight opening price. And I was looking to build up long positions inside this fair value gap and at this bullish order block. We can see that price is in a strong bullish order flow during the index morning session, during the AM session. And also we can see that price is respecting the fair value gaps, the buy side imbalances, and the bullish order blocks. So all down close candles are getting respected and supporting price to trade higher. My profit taking objective was during the New York lunch hour, starting at 12 p.m. New York local time. This finished the week and the weekly review. And now let's jump into the outlook for the upcoming trading week. Welcome to the market outlook for the E-Mini S&P500. IPDA is working efficient, and my next draw on liquidity is this fair value gap, sell side imbalance in a premium market. On the daily chart, we can see that the order flow is respecting bullish arrays or discount arrays. We can see this bullish order block and this volume imbalance has been respected most recently in previous week's trading, and Friday rallied aggressively higher and is right now at the high end of 20-day look back period. So all PD arrays in the 20-day look back are being used for price to trade higher. And now my next drawn liquidity is this sell side imbalance in the 40-day IPDA data range. Daily chart for the US dollar, and we can see here that price is trading lower. This would lead into a risk on environment, and we can see that unfolding in the index futures with higher prices. In my opinion, I can see the US dollar trading back into this fair value gap, the sell side imbalance, buy side inefficiency, to redistribute orders to trade lower into my drawn liquidity inside the 40-day IPDA data range. And with that outlook, I'm looking for higher prices for the index futures. I'm looking for manipulation lower to accumulate long positions, and ideally buying below the midnight opening price. With that being said, I will finish this video here. I wish you all a successful upcoming trading week. Be patient, stick to your trading plan, and be safe. It's DC Capital.